Hey there. Banks? They care. Nope. Banks don't care about you. Oh, but the government care. Nope. The government doesn't care about you. It's up to you to take control of your financial future because in my opinion, real freedom is financial freedom. This is not investment advice. I do this show 3 days a week. I'm not a financial advisor. I just try to help people get out of debt and invest and maintain their net worth. Thanks for watching. I call this The Dollar is Dead because every Friday we go over assets and how to maintain their value because of things like inflation. And I've got videos I put out all week trying to help you get out of debt and calculators and that sort of thing. Today we're going to talk about cars. You don't want to lose your car. You don't want to miss a payment. You don't want that to hit the credit bureau. There are ways and things you can do to get out of car debt faster, save time, and save money. And I've got multiple videos and calculators to help you do that. First, let me give you a funny story. I once had my car repossessed, or one of my cars repossessed. I guess it's not a funny story, but it kind of is because here's what happened. Woke up on a Sunday morning. It was a Honda Pilot. It was in the driveway. As usual, it was gone. Here's what happened, long story short. Found out after making some phone calls that this particular bank, it's a large bank, a national bank, I'm not going to say who it was. This was years ago. They had a glitch in their computer system, and it sent out across the U.S. They said it was either 500 or 600 cars happened to be repossessed on that Sunday that didn't need to be repossessed because their system flagged a whole bunch of people as being way behind on payments and their cars need to be repossessed. And they sent out, again, this was a while ago, sent out faxes across the U.S. to all these different companies that go out with tow trucks and repossess a car and stick it in a lot. And that Monday morning, all these people woke up, or Sunday morning woke up, and 500 or 600 of us had our cars repossessed and they weren't supposed to be. Of course, they were very apologetic. They paid the fees. I was able to go get the car. But that was a scary feeling. It was in an area where typically cars aren't stolen out of their driveways. So at first I thought maybe it was stolen. I thought that doesn't make any sense. So then I ended up getting in touch with the bank. Point is, I know what it feels like, even though I didn't miss a payment, to have all of a sudden a vehicle gone and have to determine, well, now what are we going to do when both people work and they got to get somewhere? And it's just mind-blowing. So if you take a look at these 4 calculators in the link below, and I think they'll pop up here throughout the video, the first one will help you. And these are calculators that I've worked with a developer on to get them to do exactly what I want them to do. And I put them on my own website that you can go to. And I have calculators for all sorts of things. The first one is before you buy the car, if that's something you need to take a look at, what's the true cost of that car going to be? There's all sorts of costs that are involved. You can type them into the calculator. It'll show you exactly what the cost will be. You can put in the loan information, etc. The other one is, because this is a tactic that car companies or dealerships will do, is they'll say to you, forget the price of the car. How much can you afford every month? And then they come back and they say, which one of these payments can you afford? And they're just completely not discussing the price of the car. And the price of the car matters because the loan's on that amount of money. And you might end up one day underwater or needing to sell it or whatever it may be. And you might owe way more than you thought. You can actually do a backwards calculation. You can put in the payment that they're talking about and the interest rate, and it'll tell you what they're asking you to pay for that car. Because you might be surprised. It may even be over the sticker that's on the car. Okay, that's before you even buy the car. These next 3 calculators, first, is to help you see how much time and money you can save. So, for example, you buy a car for $20,000. You have a particular interest rate over a particular point of time. So maybe it's $20,000, maybe it's 7%, and maybe it's 60 months. I don't know exactly what that comes out to be, but let's just say you're going to end up, making payments of maybe $24,000. Or let's just say $24,000. I'm just making up a number. So the point is, you're paying off the $20,000 you owe, but then you have interest over time of $4,000. Well, the first calculator will show you that if you can make a higher payment, let's say your payment's $400, maybe you can add $50 to that payment. If you can do that and you send in $450, that $50 goes directly to your principal. Watch the video, it explains everything. But instead of ultimately paying, let's say $24,000, you may ultimately only pay $23,000 or $22,000. You also would pay it off faster. So instead of 60 months of payments, being 5 years, it may only take 4.5 years. So you get rid of those payments faster and you save on interest. You save time, you save money. It can be substantial with a small amount of money every month. All right, let's say you can't do that. Here's the next calculator. It says, well, what if you were able to make a one-time payment? Would you want to put that money towards your car? Would it really help? Now, you might think, well, I'm making my payments. I can make my payments. I don't want to put any more money to the car. Why would I do that? Well, because you'll pay it off faster and you'll save on interest. Again, instead of paying $24,000 ultimately, you may pay $23,000 because you've made a one-time payment. So this calculator will allow you to make multiple ones. Sake of argument, let's say that every birthday you happen to get $200 from your favorite aunt. Put it towards the car. You're doing that every birthday, which is once a year. Smart guy here. And then that may happen over 5 years. It's $1,000. You're ultimately going to pay less in interest and you'll pay it off faster. You can put in many dates, whatever it may be. Maybe you get a bonus, you name it. Watch the video. It explains, the calculator shows you how to do it. Punch in the numbers, real simple, hit calculate, change the numbers, and just see really quickly how much time and money you can save. That's the second one. Here's my favorite one. I call it velocity banking for car loans. Now, at first blush, you might think, well, that doesn't make sense, and here's the statement. Let's say you have a 7% loan for 60 months. You're able to get a personal loan through the bank that you bank with for work or whatever it may be, and maybe it's not 7%, maybe it's 10%, and it's 12 months for $5,000. Okay. In the calculator, you put in, all right, well, I've paid it off for 14 months, and now I'm going to get this loan for $5,000. So I'll make a one-time payment of $5,000. It's 10%, and I have to pay it back in 12 months. And then you hit calculate, and it'll show you the payments you make on your loan, car loan. It'll show you the payments you're going to make on that new loan. It'll also show you the money saved, time and money saved, because you made a large one-time payment. So the reason I said it may not make sense at first is because at first you're thinking, I'm going to pay off a lower interest rate loan with a higher interest rate loan. Well, yes, but it's a shorter period of time, a lesser amount of money. This calculator does the math for you, and in some cases it works out, in some cases it doesn't. Put the numbers in and you'll see. But ultimately, typically it will, because what's happening is if you owe, say, $20,000, and all of a sudden you throw $5,000 at it, you go to $15,000. Well, interest is calculated on the total owed. So now interest is not calculated on 20, it's calculated on 15. It goes down fairly substantially. Your payment's the same on the car. The payment doesn't change. It just means that a larger portion of the payment goes to pay off the car, and a smaller portion goes to interest. So if your payment was this big, and this much went to interest on $20,000, and only that much goes to interest on 15, well, this much is going to principal. Okay. Terrible way of showing you, but watch the video and it explains, and check out the calculator. Took us a while to put it together, but it's fantastic. You can put in multiple loans. Maybe you have a loan for 12 months. Maybe some time goes by and you get another loan for 12 months. So you can see that you can make substantial savings in time and money paying off your car faster. Then lastly, I've got one because I want people to start thinking about finance completely different. And it basically says, what if you have a grant? What are you going to do with it? You're going to put it in the bank and get a yield, maybe on a CD or a treasury bond or something like that, maybe 2%, 5%, whatever it may be. But what if you took the $1,000 and you put it into your car, dropping the balance, lowering the ultimate interest, saving time, saving money? Which should you do? Should you invest it and get a little bit of a return? Or should you stick it in your car because your return is what you're saving if you're paying less for the car? So I've got an example where a particular car loan, you put $1,000 into the car loan instead of investing it, and you actually make a 39% return on your money. Okay, I would do that all day long, right? So that calculator will show you if you have a little extra money, maybe for Christmas, or maybe you got a bonus for work, or whatever it may be. Do you want to go stash it and earn some return, or do you want to just pay down your car and even get a possibly larger return? Just think a little differently about finances. Thank you for watching. I hope this is helpful. Please do subscribe so you don't miss any of these videos Monday, Wednesday, Friday, particularly on Friday, because I teach and point out that there are things you can hold instead of dollars so you can beat inflation and grow wealthier just like the rich do. Have a great day.